morning and welcome to our 303rd weekly webcast. I feel like I'm Mr. Rogers. I'm dating myself there. Remember, it was a television show for children, and he used to always come in and take off his sweater. So I'm dating myself. Bonus points to anybody that can answer this question. Who played Mr. Rogers in a movie? Okay, let me get right to your questions. One quick housekeeping announcement. If you're interested in being part of the 10th one-year gold and platinum MBA degree program, please see the link below. We have, I think, 2 spots left. We're going to cap it at 50. I think we've got about 52 right now. So I'm assuming that always we get about 1% refunds. So I'm keeping it open a little bit longer. Okay, great. Let me get to your questions. All right, so first up here, Andre, how are you? Good to see you again. Andre is in my silver class. And for those of you in my silver, gold, platinum, or diamond class, you all know that after this 2-hour weekly call is done, where you ask questions over YouTube, we have Zoom calls with all of you, okay? And you can always go to your curriculum to learn more. We have a lot of great students from all over the world. Your network is your net worth, and relationships are more important than product knowledge. Okay, Andre wrote, your programs have been a game changer for me. Thank you. I'm applying for a promotion, and I want to be recognized for my skills and not as a DEI hire. Diversity, equity, and inclusion hire. Yeah. Any advice? Thank you. Yeah. So I'm going to answer this question in a way that applies to everybody. Okay. Now, a lot of people, when they're in school, they keep their head down. They work really hard. They get good grades, and their parents are proud of them. They're proud of themselves as well. The teacher stays off your back. Then what happens is this: you join the real world, and you keep your head down. You work really hard, and after a couple of years, you look around. And you're like, dude, WTF? Why the face? Why are people getting promoted or raises faster than I am? And the reason is because behind closed doors, and you'll never know this, but behind closed doors, they asked. Closed mouths don't get fed. So here's how you ask for a raise or a promotion. I promise you this works. Step 1. When your manager says to you, you're doing a great job, and they offer you positive feedback, just off the cuff, not in a meeting, you immediately say this: thank you. Do you have time for a quick coffee? Then what you do is in that meeting, I want you to be really honest and open with them about what you feel about the team, if true. So start with this. You seem like a team player. I really enjoy our team. We've accomplished a lot together, and there's so much more that we're going to accomplish. Now, as you know, it's really expensive to raise a family here in the Bay Area or wherever you live. And I humbly want to provide the best standard of living I can for my children as they start to go to school, etc. And so I wanted to ask you, please, if you could give me some advice on what additional value I need to add to the team in order to be considered for a promotion, okay? And then what they're going to do is they're going to tell you 5 or 6 things, and you're going to write everything down in a nice notebook, never using your handheld. And if you meet me in real life, I'm a tiny man. I'm sorry. You're going to write it all down, okay? And then you're going to thank them for their time. Okay, and then at the very end of the meeting, if you're in a coffee shop, this is really important, and the bill comes, I want you to do exactly this, okay? Once the bill comes for the coffee, you got to transition to this. You got to say, I have alligator hands and I can't find my wallet. And T-Rex can't do push-ups. Okay, sorry, too many bad jokes today. No, you thank them for their time, okay? Then what happens is 6 months go by, and they're in a good mood again, and they congratulate you on a job well done. What you do is you rinse, lather, repeat. You ask for the meeting again. Do you have time for a coffee? Then in that coffee meeting, what you say is this: the crap about the team, the stuff about the teamwork stuff, if it means a lot to you and you believe it. As a team, we've done a lot of good stuff together. Last time we met, you gave me a list of 5 or 6 things that I need to humbly accomplish before I'm considered for a raise. Okay, and if you find yourself bragging, and if you don't brag, you're not going to get promoted. But if you find yourself over bragging, you could always pull a Canadian stunt. I'm Canadian. And say, I humbly achieved a lot, yada, yada. But you share with them. You gave me 5 set of criteria last time we met. And I'm very humble to say I've met them all. And so I'd love to please ask you humbly for a raise or promotion. Thank you. Now, if they come up with an excuse, that's okay. That's all right. What you do is you say, I understand, right? And if they say, well, you need to do this as well, you write it down. So you fill that gap, so to speak. Then 6 months later, rinse, lather, repeat, you do the exact same thing again. Now, the reality is, if you work in a big bureaucracy, which I hated, very political, but anybody that's vice president or manager level or above, they've done this over and over again. But you'll never know because they do it behind closed doors. Ask and you'll receive. It's prophetic. It's been true since the beginning of time. Again, closed mouths don't get fed. Okay, next question is, what do you think about the current and future state of the stock market? Is it overvalued in your opinion? And what specific indicators or factors lead you to believe this? Thank you. Yeah, we've had what's called the Trump bump. A lot of people are incredibly optimistic. And what that's leading to is a slight increase in inflation expectations. So as of last week, people expected inflation to maybe be 2.3% by the end of calendar 2025. I wouldn't be surprised based on economic data I just read if it's not closer to 3%. So what that means is I think later this year, the Federal Reserve will raise interest rates, which will have a slightly negative impact on the market. Now, the markets were up 25% last year. I don't think they're going to be up that much this year. Now, nobody can time these things, and I'll show you the indicators I look at in a second. Nobody can time these things, and you got to be long-term focused. And the worst thing you can do is try to day trade the market. Day trading doesn't work. You got to be long-term focused, okay? And you got to tell yourself this when you invest in stocks or ETFs like the S&P 500. I don't know the path, but I know the destination. And I want you to be long-term focused. Like Warren Buffett, for example, when he invests in stocks, when he bought Coca-Cola, which he still owns back in 1990, he told himself, I'm assuming the market's going to be closed for 10 years. That's how long-term focused he is. And I don't want you all, and I say this with love in my heart, to fall into the cardinal sin of selling something because it's going down. And as Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff and it goes down. So I want you to dollar cost average. Here's what I want you to do. No matter how well the market's doing or how poorly the market's doing, I want every 2 weeks when you get your paycheck, I want a certain amount of money taken out and put into your retirement savings account. It can be in ETFs or your favorite stocks. Now, in terms of risk management and portfolio diversification, I never recommend having more than 5% of your liquid net worth, meaning your portfolio, in any one particular stock. Okay, so that means you got to have a minimum of 20 stocks unless you use ETFs. Now, the market will certainly not be up as much this year as it was last year, but just be long-term focused. Okay, so I'll give you an example of being long-term focused. Let's say you love NVIDIA, and I own a bunch of it. I bought it the second ChatGPT was announced. It's gone up. I've had to sell a bunch as well because it's getting too big in my portfolio. If you tried to day trade NVIDIA, okay, over the next decade or the past decade, you're going to pay more taxes if it's not in your retirement account, and you're going to destroy value. And you've all owned a stock in the past that has done incredibly well, but you sold it because the chart looked like this one day. So I want you to be very, very long-term focused. And when you invest in companies, I want you to start by asking yourself this. Number one, in 5 years, will this company or the sector it's in be more relevant or less relevant than it is today? Then what I want you to do is I want you to do your own write-up on the company. Don't listen to me or anybody else in terms of what stocks to buy. Now, in my MBA degree program, I provide my students with a 100-step dashboard that will help you, like professional investors do, select stocks. Okay, and the way it works is this. This is based on my experience, working at Goldman, working at the biggest hedge funds, working at VC, etc. The way it works is this. When you analyze stocks, okay, you start with qualitative research, like the management team, company history, product, services, catalysts, etc. And there's 100 steps. And you complete all 100 steps, and I create a massive report for you. The second part of 3 is quantitative research, like the total addressable market, market growth, etc. The third and most important part is the financial model. And I teach you from scratch how to forecast a financial model. If you have no experience in finance or accounting, don't worry. I teach it from scratch with a lot of fun props. You forecast all this stuff, and you're going to value the company using 3 valuation methodologies. PE, PR, price to revenue, and DCF. I can go through these in more detail if you want me to. Then you take a blended average of all 3. And what comes out of this is a 1-page executive summary and a massive report and a dashboard, etc. All right, now let me get to your question about how can I tell if the market is going to pull back. This doesn't work perfectly, but what you can do is you go to finance.yahoo.com. Let's go there together. Then what you're going to do is you're going to type VIX. Okay, VIX is the volatility index. Now, don't make this the primary thing you look at when you want to invest, but this can tell you how much fear there is out there or greed. So as of right now, as you can see here, whenever the VIX is down below 20, it means there's very, very little fear out there. Okay. And so when the VIX spikes to above 70 or 80, which it's done twice, okay, it did it in the beginning of 2020 and also back in 2008, right? And it did it intraday. You can't see it here, but it did. But when that happens, and it will happen again, I don't know when, I don't care. I will put my reputation online, tell you, you go all in on riskier stocks because there's maximum fear. And as Warren Buffett said, there's blood in the streets when that occurs. Now, Warren Buffett backed up the truck and bought a lot of stocks in October of 2008 when we were within 24 hours of bank machines not working. Things are never as bad as you think. But the bottom line is, it seems like there's no fear at all in the equity markets at this point. Okay, let me get back to the next question. Thanks. And if you have additional questions based on that, always let me know. Thanks. But I do know that I think that the S&P 500 will be up 20% or so on average for the next couple decades. I promise you there will be down years, though. Again, I don't know the path, but I know the destination. Now, the reason I'm bullish and have been bullish on the markets, more so than in previous years, is because of AI. So a lot of companies, what they're doing, let me get a prop to explain this. A lot of companies, what they're doing is they're materially cutting expenses because of AI. So the three main expense line items that they're cutting are R&D, S&M, and G&A. Let me explain that, okay? So when it comes to sales and marketing, a lot of companies, including mine, are not hiring people. They're replacing customer service with AI. I pay $20 a month using a chatbot. I can show you the demo of that if you want me to. It's all based on AI, okay, ChatGPT. Now, the administrative stuff, the repetitive stuff, is also being replaced with AI. If you work in a repetitive role, please disrupt yourself before the marketplace does. And then lastly, we've got R&D. A lot of R&D is going to be done by AI and AGI, which is artificial general intelligence. And a lot of you probably saw the press conference of President Trump, along with Sam Altman and Larry Ellison, talking about Project Stargate, which is a dope name. And what that means is they're going to build $500 billion worth of AI infrastructure here in the United States and not overseas. And Larry Ellison, when he took the podium at the White House, what he said is that he thinks we will find a cure for many cancers because of AI analyzing R&D. So the bottom line is that I think the markets are going to do great in the long run because we're cutting expenses materially. Instead of hiring people, you're going to trim expenses, okay? Now, the next phase at the top here of your income statement is revenue, okay? The next phase of AI growth, once we have AGI, which means really, really smart AI in a couple of years, it stands for Artificial General Intelligence. Once we have AGI in a couple of years, companies are going to be focused on growing revenue as well with AI. I already have an AI version of myself that speaks multiple languages. It speaks English much gooder than myself right now, something I'm considering deploying in the not too distant future. Always try to disrupt yourself before the marketplace does. Kind of like what Reed Hastings did at Netflix when he switched from DVDs delivery through the mail to online streaming. Think long term. Okay. All right. Next up, Ray wrote, I've got a lot of questions. If there's too many, please skip. No, please, the more the better. I live for this. Yeah. Okay. And I've got a cold as well. You hear me cough every now and then, but I feel great. And the way you know you found your passion in life is when you're sick and you still want to go to work because that's your passion. I love this stuff. Okay. All right, next up, Ray wrote, do you print out the SEC filings or do you read them online and make notes? Yeah. No, I read them online. I create my financial model based on that. Let me give everybody a very quick tour of how SEC.gov works. So in the United States, the stock markets are regulated by the Securities and Exchange Commission, which was founded in about 1930. And the way it works is whenever a company releases earnings, they have to release what's called an 8K press release, so that everybody on the planet gets access to the information at the same time. Companies also release quarterly reports called 10Qs 3 times per year. Then they release a 10K, okay? And the 10K is an annual report, which includes the quarterlies of the fiscal fourth quarter. Let me show this to you in more detail. Okay, so let's go together, and don't ever pay for any research online. You always do the research yourself. Let's go here, and let's type here at sec.gov, Tesla, okay? Here we go. All right, and what you can do is you can look here at the 8K reports for Tesla when they reported earnings. So this here is the earnings press release. Then you can look at the annual report here and the 10Q here, which I'm covering up a little bit in the corner. Now, when it comes to the 8K, okay, what happens is, that's new. What happens is the company releases this whenever they release earnings. You can click here to go to the press release, okay? Then what you can do is you can usually click on another link down here if they don't provide it here in the press release. And then you can actually add all the details directly to your financial model. Okay, and sometimes you have to click a couple of these to get more details. And I'm going to show you the financial modeling update process in a second here. Okay, so here it is here. Here's the third quarter. All right. And right here, Tesla's a little bit different. They give you a presentation. Most people just give you text. You've got the financial summary, meaning all the financial statements here, as well as guidance for the next quarter. Then once you get this information, I used to do this when I worked in the hedge fund industry in like 5 minutes. Then you got to quickly update your financial model. Okay, so I would update here my income statement, and you can chart all this stuff as well here. And if revenue and earnings are better than expected, sometimes the stock goes up, but not always. The reason it doesn't always happen is because the company might provide guidance for the next quarter, meaning they might say that revenue and net income for the next quarter is going to be worse than expected. Another reason a stock might go down, despite the fact they had really good earnings, is if deferred revenue goes down, which is from the balance sheet. I can talk about that in more detail if you'd like me to. Always update your own financial model. Never get financial models from Yahoo Finance or any other service. Always go directly to the source, meaning sec.gov. And the reason is because there's lots of mistakes on Yahoo Finance and any other service you pay for. Yeah. All right. And I could talk about the quarterly earnings call in more detail as well in terms of forecasting your financial statements and coming up with a target price and making money in the long run. All right. Next question is Ray. Can you easily identify companies with a price to book of less than 1? Yeah, you certainly can. You can use any service, and I know I'm talking out of two sides of my mouth here. Let me hedge this by saying this. You can go to Yahoo Finance and do a screen, or Seeking Alpha and do a screen. Find companies that have a price to book under 1. Then once you do that, you need to go directly to the 10K, meaning the annual report of the underlying company you're doing research on, and calculate the price to book yourself. Now, for those of you that don't understand price to book, it's something that value investors look at closely, like Mr. Buffett. And what that means usually is if the price to book is 1 or below, then the company is worth more dead than alive. Okay. So what that means is this: if the company were to sell off all its assets and take the cash, they're worth more dead than alive. Okay, and private equity firms love to pick apart companies that have a price to book that are quite low. Now, you can't just blindly look at the price to book and buy a company because it looks cheap. It might be cheap for a reason. And you might have to go to the 10K, meaning the annual report, and look to see what the risk factors are. Maybe there's a massive litigation issue. Now, I'll show you how to use AI to analyze financial statements. Okay. So what I've got here is a course I'm releasing very soon, towards the end of Q1. And this course here is going to allow you to use AI to analyze financial reports. So what you will do is you'll enter in the company here, then you'll enter here the AI prompt level, right? You can start at 8th grade level, which is my maturity, or you can go university level, professional accounting level, hedge fund, mutual fund level. Okay. Then what you're going to do is I'm going to explain the income statement from scratch using a lot of props, including Tesla. We're going to make Tesla's income statement together. Then we're going to create Walt Disney's balance sheet and cash flow statement together. Then you're going to enter in information on the company that you want to do research on. And you're going to analyze every part of the 10K. And we have plenty of examples here, real life examples. And I pride myself on teaching not based on theory, but real practical experience and real examples. We'll analyze NVIDIA, Supermicro, which blew up last year, Berkshire Hathaway, Warren Buffett's company. And I'll ask you a lot of questions about the company you're doing research on, and we'll use AI to analyze everything. Okay, and what will come out of this is a one-page write-up, as I usually do, and a massive detailed report. Bring this to your portfolio manager if you work at a hedge fund. He or she will love it. Or bring this to your informational meetings. I promise you you'll do incredibly well because of that, because nobody else does. And ask yourself, how badly do you want that job if you think it's too much work? And also, create these reports yourself so you can become a better investor. And always think long-term as well, please. All right, let me go to the next question there. Okay, The markets seem overvalued with a PE of the S&P over 27. Isn't it a good idea to buy more defensive stocks? Yeah, that's a great question. So when it comes to investing, there's two camps. Okay, there's value investors that buy stocks that have good cash flow, like Warren Buffett with Coca-Cola, ticker KO. And there's growth investors like me that like to buy expensive stocks like Nvidia. They might seem expensive today, but they're not expensive based on the long-term earnings forecast in my financial model. Don't ever buy a company that's transitioning from growth to value because it's in no man's land. And the likelihood you make money in 1 quarter, 1 year, 1 decade is quite low unless an activist investor comes in to invest in the company. Okay. So defensive stocks are ones with higher dividend yields that throw off a lot of cash. Okay, and usually have a lower price to book. You can do that if you want to. However, I'm much long-term focused. And a lot of people use what's called the dogs of the Dow theory. Let me explain that. And this is a defensive way to invest. So the Dow Jones 30 industrial companies, it's 30 big companies that sort of represent the US economy. What a lot of people do with these 30 stocks is they pick the top 6 from a dividend yield perspective and just invest in those. And that's a way to have a defensive portfolio. I wouldn't go all in on value stocks though, because your upside's not going to be that great in the long run. Think long term. Now, a lot of people will ask me, Chris, when I'm managing my own money, what percent of my portfolio should I put in risky stocks versus less risky stocks? Well, a simplistic way to look at this is as follows. Take 100 minus your age. So let's say you're 80 years old. 100 minus 80 is 20. That means that 20% of your investment should be in riskier stocks and 80% in lower risk stocks or defensive stocks like dogs of the Dow stocks or bonds that are AAA rated. And the reason is because you only maybe have 20 years left to make that money back if you screw up with growth stocks. Now, this is an old school private wealth management rule of thumb here because I think a lot of people on this call are going to live to 150. Let me give you another example. Let's say you're 25 years old. 100 minus 25 is 75. That means 75% of the investments in your portfolio should be in riskier growth stocks, not too risky, and 25% in defensive stocks, maybe the dogs of the Dow theory I spoke about, and AAA rated bonds. And the reason is because the 75% in growth stocks will do better in the long run. And if you screw up, that's okay. You've got the rest of your life to make it back. If you have follow-up questions on that or risk management or portfolio management, let me know. Thanks. All right. Next question is from Ray is, where is the earnings line? Okay. And the price line chart free as information. Yeah. So what you can always do if you want to just look at how a stock is done, my favorite charting service is always Yahoo Finance. Okay. And for those of you that subscribe to Bloomberg, please don't anymore because you can get all this stuff for free on Yahoo Finance. When I ran my hedge fund, I used to spend thousands of dollars a month on Bloomberg. It's a waste of money. You can get all this for free, including options stuff directly here in Yahoo Finance. So what I would do is just use this. Okay, you can always add indicators as well. Okay, so if you're a technical person, be careful with it. Don't rely too much on technicals. You can always add here indicators. You can do it for free actually in here. The RSI, the relative strength index, etc. I can go through what that means in more detail if you want me to. Now, when it comes to charting earnings or revenue or any financial line item from the 3 major financial statements, don't use any service because they make mistakes. Go directly to sec.gov. And what I like to do is I get the information, I put in my financial model, and then over here I have everything charted here. Okay, so this is revenue on a quarterly basis. Okay, and this is every single number here on a quarterly basis as well, including G&A, etc. I also look at it on an annual basis as well. And in my MBA program, you can find more details on it at the link below. I also teach you every single thing you can do in Microsoft Excel. And I mean everything, programming, etc. It's a great way to learn finance as well as learn technology. All right, next question is, how can you understand which companies employees are heavy owners? Yeah, so you can go to sec.gov, okay, and you can always search for Form 4s, okay. What you can also do is you can look at 13Gs, okay, those 2 filings if you want to. And there's something called behavioral finance. You can make a lot of money doing what I'm about to explain, as long as you do your own research. You can do a regression analysis using Excel. It's easy to do, which is kind of a subset of machine learning, which is a subset of AI. You can do a regression analysis and figure out when executives have bought or sold shares of their own company in the past, Has the stock been much higher or much lower a year later? For example, a great case study I use with my MBA students is in Q1, the first quarter of 2020, when everybody was freaking out about the markets because of COVID, and the price of oil went to negative $30 in the futures market. Crazy. I can talk about it if you want me to. But back then in Q1 of 2020, Elon Musk bought a ton of shares in Tesla. Okay, he went all out buying Tesla shares. And what happened was a year later, Tesla was up materially. Now, in the fall of that year, 2020, or maybe it was the fall of 2021, he sold a ton of shares in Tesla. A year later, it's down a lot. And so you look at what's called behavioral finance. This will help you out a lot. For more details on that, you can always do research on Dick Fuller and Richard Taylor, who got Nobel Prize in finance for behavioral finance. This works. When I used to work in the hedge fund industry, I would meet with Bobby Kotick, who's the CEO, founder of Activision, ticker ATVI, which got bought by Microsoft. And I did very well, humbly, going long and short his stock by doing exactly that. When Bobby used to buy a lot of shares in Activision, 1 year later, the stock was much higher and vice versa. And I remember I met with him once in a hotel room where you do one-on-ones in Carlsbad, down in Southern California. And I asked him, I think it was like 05 or 06 or something. I said, how should we think about the fact that you're selling a lot of shares? He was kind of funny about it. He said, well, what do you want from me? My wife, she has expensive tastes. Yeah. Too much information. Behavioral finance. Look it up. Use it. All right. Next up, apart from One Up on Wall Street, the book, and The Intelligent Investor, One Up on Wall Street, this book here, which other books for investing would you recommend? Yeah. So for those of you not familiar with One Up on Wall Street, this is written by Peter Lynch, who is probably the best portfolio manager back in the 90s for the flagship Magellan Fund at Fidelity. And what he used to do, and I recommend reading this book, what he used to do was he would try a lot of the products before actually investing. Makes sense, right? You know, if you have an NVIDIA graphics card and you love it, maybe look to invest in NVIDIA after you do a heck of a lot more research, etc. Okay? And when you get that excited feeling deep down inside on a stock, and I can't explain it, but it gives you butterflies. You're so excited about it because you've tried the product. Quickly build a financial model and a complete write-up per my 100-step dashboard and do the work. Because these types of companies could be 5x5s, which means a 500% return within 5 years. Now, more often than not, I'm wrong, but if I'm right on my 5x5 a little bit, I usually make a lot of money. Let's talk about other books. You mentioned The Intelligent Investor, which is written by Graham and Dodd. The reason that Warren Buffett went to, the only thing I have in common with him, actually a couple things. Number one, he went to Columbia, did his MBA there like I did. The only reason he went there is because that book was written by Benjamin Graham, who's a professor at Columbia. And that book is the Bible, so to speak, when it comes to value investors. It is so boring, dude. I've tried reading it. Oh my God. If you're going to read it for 30 minutes every morning, and that's it when you're fresh. Okay. But when Warren Buffett guest lectured my class at Columbia University in December 1999, his wife was there with him. God bless her. She passed away. But she was teasing him because on his honeymoon, she said on his honeymoon, he brought that book, The Intelligent Investor. And that might be a good side note here for talking about what your passion is in life. What is the one book, and it can't be fiction, that you would bring on your honeymoon? That might help you think about or crystallize your thought process in terms of what your career should be. Let me move on to other books as well that I think you should check out. Okay, so I recommend reading every book you can find by Nassim Nicholas Taleb. He's a Lebanese dude. I'm quarter Lebanese. And he talks about the problems of being short-term focused. So here, The Black Swan. This book here, I'll summarize it in one sentence. This book here basically says markets crash because of things you can't forecast, like a black swan, which is very rare unless you live in Australia. So a black swan could be COVID, or a black swan could be the 2008 financial crisis, or 9/11 when the markets pulled back significantly in Q3 and Q4 of 2021. This is a good one here. Aside from that, I don't really have any other finance books that I want to recommend because they're way too theoretical. Now, when I used to work at Citadel, I remember I spent half an hour with Ken Griffin one-on-one in his office. Really smart guy, man. And we talked a lot about stocks, etc. And whenever I'm in somebody's office that's more successful than me, which is every single meeting I'm in somebody's office, I always look at their bookshelf to see what books they have, and I order them on the way down the elevator. And he had a couple of books from an NYU professor. God, I'm trying to remember his name. Damadorian, I think is the guy's name. Do a search on that. I'm sure Google will correct your spelling like it does with me all the time. So if you're going to read anything theoretical, you can do Demidorian books, the NYU professor. Now, aside from that, other books that I recommend, this is a good one here. And this will help you not just in finance, but all aspects of your life. Okay. This here is called Give and Take. And the bottom line message in this book is as follows. The top 1% of people by net worth in the world are givers, and most other people are takers. Okay. Now, if you're a giver, and a lot of billionaires are actually, yeah, there are avaricious, selfish, mean people that are billionaires, but a lot of them are nice. And the reason they got to the top is, maybe they cut corners, I don't know, but they also help people, right? And so if you help other people, you give your time, not just money. If you mentor other people along the way to success, what you're doing is you're mentoring yourself, because when one teaches, two learn. And also, when you mentor other people, you're reinforcing your blueprint for success, so to speak. So you're kind of teaching yourself. So make sure that you mentor other people as well, and help other people along the way. I promise you, it'll help you in the long run. Give, and you'll receive in the long run. It's worked for me exceptionally well. I love to help people. It's just who I am. Okay. Other books, let me see. If you want, the most important skill set you can learn is networking. And if you want to get a job, get a promotion, etc., you have to network. Now, every time you see a job opening online, you literally have a 1 in 250 chance of getting that job. And the person that gets the job is the person that networked like crazy. And I teach you exactly how to do this in my MBA program. You don't have to buy my MBA program. What you can do is get the book for free, and I'll show you exactly where to get it. I'll make this quick. So all you do is go to harounmba.com and then just scroll past all my propaganda here. Sorry. Scroll down. You got to laugh at myself, right? You can go down here and download the book for free if you want to. Okay, and if anybody else has good ideas, I'm so sorry, on books to recommend, but by all means, share them with everybody here. Okay. All right. And I knew I was getting sick, man. It kills me. I wear this Oura ring. Okay, I rarely get sick. The Oura ring, which I recommend everybody get, it's amazing. And it kind of told me I was getting sick. It analyzed my heart, and I didn't care. I did an extra 2 hours in the gym and pushed through it, but I should listen. I'm an idiot. Okay. But I feel better than I sound. All right, next up, I've got Ray wrote, doesn't it make sense to look into one sector, like technology, healthcare, etc.? Doesn't it make sense to look into one sector and look there for good stocks instead of following many? Yeah, you're talking about being a jack of all trades, a master of none. Yeah, the most successful investors tend to focus on one sector at a time. And what I found when I worked in the hedge fund industry is if analysts focused on too many sectors at once, like industrials, cyclicals, technology, etc., they really weren't that good at investing and getting good returns, because when you do research on stocks and you have a portfolio of 20 stocks or so, you'll find that every single year your portfolio, the return on your portfolio, comes down to 1 or 2 amazing ideas. So focus on one sector if you want to. I don't want you to be too exposed to one sector, though, from a risk management perspective, because all tech stocks, for the most part, tend to move together, for example. So I would limit your portfolio to 20% any one sector. So that means at least 5 sectors, which could be technology, industrials, healthcare, financials, and retail, for example. It's just good risk management. And if you don't have the time to do research on individual stocks, ETFs are fine. Yeah, but make sure the ETFs you buy have very, very low fees, meaning less than 10 cents per $100 you invest every year. I can talk about that in more detail if you'd like me to. Okay. All right. Next question is, okay, Olaju, first time I've seen you on the call. Welcome. I hope you join us again. I wrote, do I need a college degree to own or work in a hedge fund? Absolutely not. Absolutely not. And universities are in secular decline. Like a lot of these kids that get into Harvard or Stanford, these other schools, a lot of times they got in because their parents are extraordinarily wealthy, right? It's a little bit ridiculous that they still get in. And so what's happening is there's a move in the industry, all industries actually, to not really look at universities anymore as much as they used to. For example, at Google, IBM, Wells Fargo, which is a financial services company, as well as Facebook, Apple, you do not need a university degree to get a job there, okay? And the problem with business schools or business education in general from accredited universities is they teach you theoretical crap that was relevant last century, if at all. And that's why I wrote this book. 101 crucial lessons they don't teach you in business school. Business school doesn't teach you the most important skills you need to be successful. Just network. Your network is your net worth. And there's tons of people in many different industries that started in the mailroom and became CEO. I'll give you examples. So Sidney Weinberg, who is the CEO of Goldman Sachs for over a decade, no university education, he started in the mailroom. Simon Cowell from American Idol, whatever happened to that guy, he started in the mailroom. Okay, David Geffen from Geffen Music, he started in the mailroom. Tons of people did, including the former editor-in-chief of Cosmopolitan magazine. Why? Because people in the mailroom are very social, right? Your network is your net worth. Relationships are always more important than product knowledge. All right, let me move on here. All right. All right, Lay wrote, good morning from frosty UWS, was at Upper West Side. I used to live there when I went to Columbia 8 billion years ago. I lived on Broadway and 81st on the second floor. All right, Shahar, how are you? Ani chote kafi achshav. Shahar is one of my MBA students. Good morning to you as well. All right, next up, Tommy wrote, what's the best way to approach a recruiter for a job you're interested in on LinkedIn? Should you ask for an informational call? Do you send them a resume? Yeah. So my success rate, humbly, okay, that's a Canadian who's about to brag, sorry. My success rate on getting meetings with people by networking using my methodology on LinkedIn has always been 95%. And I don't say that to impress you, rather I say it to impress upon the fact that you can do it as well. So here's how it's done. Step one, create the most astounding LinkedIn profile you can. And in my MBA degree program, it starts on January 27th. We start off the program by teaching you that. If you're in my platinum or diamond program, I actually personally create your entire LinkedIn profile myself. Step two, what you're going to do is you're going to send out in-mails to people that you want to connect with. It could be a recruiter. It could be a C-level executive at a company you want to work at. Okay, always go to the decision maker. Now, the best way to approach these people is to send an in-mail. Don't send an email because nobody reads those anymore. And in the in-mail, I want you to write exactly this. Subject line, hi. Doesn't matter. They're going to read it anyway because everybody in this call has read every in-mail we've ever received. Contents of the message are as follows. John, hope all is well. I also went to, name your school if you did. And I also am from, name where you're from. And I'm also a member of whatever club they're a member of. You look for 1, 2, or 3 things you have in common with them. Okay? So here's the message, and I'll give you an example. John, and let's pretend this is, I don't know, a C-level executive at a financial services firm I want to work at. John, hope all is well. I'm also from Mississauga, and I also went to the Toronto French School, and I also live here in the Bay Area. Please let me know if you have time for a coffee. Thanks a lot, your future boss. Thanks a lot, Chris, of course. Now, you'll notice the strategy right there. I didn't say why we want to meet. And there's nothing unethical about that. If you say why you want to meet, like I'm looking for a job, they're not going to answer. You want a little bit of mystery with that email, so to speak. Now, the reason why they're going to take that meeting is as follows, okay? And a lot of people are skeptical out there. I know that. Let me give you an example. Let's say it's 20 years in the future, okay? And you're all 20 years more successful than you already are today. And somebody 20 years younger than you reaches out to you over LinkedIn, and they have a lot in common. And they say something like, Joanne, hope all is well. I'm also from Mississauga. I also went to the Toronto French School, and I also live here in the Bay Area. Please let me know if you have time for a coffee. Would you take that meeting with that person that is basically you 20 years ago? You're darn tootin' you would. Of course you would. Nobody does it, though. You have to do this. And the way to get a job at any company is this. Let's say you want to work at Google. I want you to do an advanced search. Well, step one, get an amazing LinkedIn profile, which I can help you with in my silver, gold, platinum, and diamond programs. Step one, get an amazing LinkedIn profile. Step two, I want you to reach out to 20 or 30 people that work at Google that have a couple things in common with you. And I want you to set up informational meetings like that. Try to do it in person if you can, or do a Zoom call if you can. Now, what the heck do you say in these meetings when you get the meetings? Well, just be yourself. You always want to bond before business. So what you can do is you can look to see on LinkedIn who they follow. You can go to their X profile or Insta profile and see what their hobbies are. I've got to get a prop for this. I'll pick a Canadian prop because I am Canadian. So let's say they follow hockey. So you can talk about hockey in the informational meeting, right? Or you can just quote, like, the greats like Wayne Gretzky, who used to say he was successful not because he skated where the puck is, but rather because he skated where the puck is going to be. Right? So you could put those quotes in. They love hockey. Don't make it too obvious to the extent that, it comes across as, I was stalking your LinkedIn profile and I saw that you like hockey too. Make it natural, okay? So you're going to bond before business. You're also going to talk about what you have in common as well. So say you went to the same, high school or undergrad or whatever it is. Then what you can do is you can say something like this. Did you hear about the new student center on campus? Just find something in common. You can talk about the news as well if you want to. Then what's going to happen is very naturally, they're going to say this, and they won't say it this harshly, but they'll say something like, why are we talking? And then at that point, I want you to say, well, I'm really interested actually in potentially working at Google, and I just want to ask you what a day in the life is like, right? And people love talking about themselves. Look at me, I keep talking about myself. Enough already, Haroun. But they'll talk all about it. Then I want you to follow up with this, okay? And this is key, and this will feel uncomfortable, but I don't care. I say this with love in my heart for you. I want you to ask for a job. I want you to say, are you currently hiring? I would love to work with you or work for you. And if they say no, then you say, well, is there anybody else at Google that maybe also went to the Toronto French School that might be hiring? And if they say no, you keep digging, okay? You say, well, do you know anybody else, any other tech companies that similar to us also went to the Toronto French School that you could please introduce me to? I'd be grateful. Asking, you'll receive. It's prophetic. It's been true since the beginning of time. This stuff works. And you only have to be right in business one time, okay? All right. Tommy then wrote, typically, what's the goal of an informational call with a recruiter for a job that you may be interested in? How would that proceed to an interview? Yeah. You want to bond before business initially, right? It's the most important skill set because they're going to be looking at you thinking, can this person talk to clients? Can this person have a conversation with my client who is the CEO of the company that's recruiting? You want to bond before business always. Never jump into a meeting and start talking business. Okay. And I can go into more details now if you'd like me to as well. Okay. And then Lay wrote, go Ray, more questions. Chris lives for this. I do. I love this. Love what I do. Okay. Vegas Weddings wrote, and by the way, Vegas Weddings, MBA, it doesn't stand for Masters of Business Administration. It stands for Married But Available. I'm just kidding. This never comes off. I know I've used that joke before. Laugh at me, not with me. All right. Vegas Weddings wrote, uh-oh. Chris, you remind me of Wags from Billions. Oh, boy. Oh, boy. Yeah. All right. Chibike, excellent. Fred Rogers, you are correct. You are correct. And Lay wrote, Tom Hanks played Mr. Rogers. You are right. Excellent. Das ist richtig. All right, next up we got Sanjay who wrote, hey, Chris, your Udemy courses helped me a lot. Thank you. Thank you. And Udemy is a very important partner of mine. I think that they're going to be changing the world. I signed an NDA with Udemy, so I can never talk about the stock, but I'll show you just their commitment, okay? Now I focus mainly on my own stuff on my website. But they've been really supportive. And I'm building my next school in Africa. I'm building 1,000 schools with my profits. And so this is the one we're building in Kenya. And I'm so grateful that Greg and Janef are both on my board. They also donated to the school that we built in Rwanda that I finished a couple of years ago. Yeah. And thank you also to Microsoft and IBM for donating computers and software and stuff. Education is the most powerful weapon we can use to fix the world. All right, next question I've got here is, Tommy wrote, what is the weighted average cost of capital, the WACC? Yeah, and how do you use this to determine how a company will use its capital for a particular technology purchase? What fundamentally is the determining factor? Yeah, so the easiest way to explain the weighted average cost of capital is, what is the interest rate on the company if they want to get money? And there's two components to it, and I can show this to you in a spreadsheet in a second. There's the cost of equity, right? Like meaning the stock market. And there's the cost of debt. And I'll show you how it's calculated very quickly. It's actually a key component of what's called discounted cash flow or DCF. All right, let me go to my 100 step tab here. Okay, let me go over here. And I'm going to go here to DCF. All right, so there's two components, cost of debt and cost of equity. Now, what you do when you start with calculating both of these is you take the lowest risk in the world, which is the United States Treasury, Okay, you get it from the yield curve, which I'll show you in a second. Then you add on other stuff to make it more expensive, meaning to make the interest rate higher, because the company you're investing in is more risky than the United States government. The United States government is the last company on the planet to ever go belly up. So you're going to put the cost of debt here, which includes the interest rate they would pay on debt, which is going to be higher than Fed funds rate. And then cost of equity, basically the reason why the cost of equity might be high is because of the beta. So if a company has a beta of 2, it means it's twice as risky as the rest of the stock market, which pushes up the cost of equity. Then what you do is you get the blended average, okay, depending on how much debt and how much equity you have, to find the weighted average cost of capital. And you use this to discount your future cash flow as well. Now, in terms of where do you get the risk-free rates, I mean the lowest risk rate in the world? Well, let's go together to treasury.gov. And this is where you can get interest rates, okay? Department of the Treasury, United States government. We'll click here on data, and then we'll click here on the yield curve. And the yield curve tells us, what rates are right now, short-term and long-term rates. Let's pick the current month here, okay? So as of now, and I'll just pick the top here, okay? So 1 month rates are 4.42% today, okay? 3 month rates are 4.36, and the 30-year is 4.79. Yeah, things are looking healthy. The yield curve is no longer inverted. Yeah, and this is healthy, actually. This is why the market is up also, because longer-term rates are higher than current rates. And when longer-term rates are higher, the market is basically telling you, hey, things are going to be good in the future, so the government is going to raise interest rates to cool down the economy. And you all have to pay close attention to the 30-year rate, because it impacts everything you do in your life. Because your mortgage, which is probably 7 or 8% if you have a 30-year fixed, is based on this number. When this goes up, so does your mortgage as well. And if you're interested in more detail on investing in real estate, which is the best real investment you can ever have, within my MBA program, I teach you how to invest in primary residential real estate, as well as rentals for commercial, etc. You enter in your city, the address. I do all the work for you. Then what I do is I teach you an ideal investment. I help you select the property and value using 5 methodologies. I teach you about mortgages. I create your income statement, balance sheet formulas, etc. And then you get a 1-pager out of this, okay? And then a massive business plan is as well. Failing to plan is plan to fail. I help all my students always work smarter and not harder. And lastly, what that looks like is this when you print it out. It's a 27-page business plan for you, okay, based on the property you want to buy, okay? And my humble goal for all my students is that within 10 to 15 years, I want you all to make more money from your real estate rental properties than you do from your base salary, okay? And it's not that hard to do. And for those of you already in my silver, gold, platinum, or diamond MBA program, go to the very last lecture of your MBA degree program and get that real estate elective for free, along with many other electives. I'm constantly adding more and more, which you all get for free if you're part of the program. Okay, next up, Mike Flynn. Hey, Mike. Mike wrote, hi, Chris. My Schwab brokerage account also offers various money market funds, mutual funds, with interest rates around 4.3%. Are these good places to park cash? What are the pros and cons? Yeah, a couple things. So whenever you look at the balance sheet of a company, okay, a company's balance sheet has assets and then also liabilities and equity. Now, within the assets, what they do is it's sorted by what can be converted to cash fastest. So a balance sheet, usually what they do is they have cash first, okay? Then below that, stuff that's like cash, but invested in short term, that's a higher rate. And the reason why they have short-term investments below cash, the reason they include that is because if you just have cash sitting in the bank, you're gonna make nothing in interest. So it's fiscally responsible for you to invest in short-term stuff instead of cash. But if it's cash you need in the next couple of months, make sure you can get out quickly. So when it comes to investing in treasuries, for example, you can always get out of those really, really fast. In terms of whatever fund it is you're looking at through Schwab, I want you to look at a couple things. Number one, I want you to look at, see if there's a lockup, meaning if there's a penalty for selling the asset within a couple of months if you need the money. Number two, I want you to look at the expense ratio, meaning how expensive is it to invest in this asset class. And I want you to download the prospectus and read everything so you completely understand what is in that thing. Make sure it's not risky stuff. And if you have more questions, please let me know. Thank you. Okay. Get some coffee here. All right. Eileen, how are you? Eileen Dale Gracias, one of the OGs last decade when I launched the MBA program. She's one of my first students. Eileen has the most beautiful last name, which is Dale Gracias, which is Spanish for thank God. I love it. And it was a pleasure meeting you in Atlanta when I was there at the Coca-Cola factory a couple of years ago. And I hope you come, actually. For those of my Gold, Platinum, and Diamond program, I've got a 3-day networking event here in the Bay Area on September 27th, 28th, 29th of this year. It's a graduation ceremony as well. You don't have to graduate to attend. It's going to be a lot of fun, great networking opportunities. Yeah. So Eileen wrote, good morning, Chris. Happy Thursday. Same to you. I'm in the middle of your complete options course. And you've made a totally confusing concept, understandable one. The Excel spreadsheet is worth it. Thank you. Thank you. I use a lot of props as well when I teach everything about options. Because options is quite complicated. Yeah. And I have 35 different reports you can create based on 35 different option strategies. Yeah. And if anybody has questions about options, I'm here for you. Yeah. Thank you. Okay. You wrote the Excel spreadsheets are worth their weight in gold. Thank you. I do have a question about the interest rate. Sure. How do I find it since 2022 is different from 2025? Yeah. Yeah. So what I recommend doing is, as I just showed you, I recommend going directly to treasury.gov to get the risk-free rates. Okay. And I would probably get the 3-month, okay? So what you're gonna do is you wanna enter this number exactly, okay? Because today's January 22nd, or that's the most recent data point, that was yesterday. I want you to enter in 4.36%, okay? And that's your risk-free rate. And if you have follow-up questions, let me know as always, and thank you. Okay. All right. Rambler wrote, what are your thoughts on leveraged ETFs that are 2X? Yeah, I'm against them. Warren Buffett said in the fall of 2008, that derivatives are weapons of mass financial destruction. So a levered ETF means you're going to get twice the return. Okay, so let's say that you invest, I'll give you an example. Say you invest in the VU, which is the S&P 500, and it's up 10% a year. Well, if you invest in a levered version of that, 2 times leverage, instead of making 10% a year, you're going to make 20%. But if the market goes down, you're going to get hit hard on that as well. If you're going to use levered ETFs instead of the 5% rule, 5% of capital in any one particular investment, make that 2.5. Okay, just to mitigate your risk exposure. And always think long term. Question is, what are your thoughts on options trading? Yeah, I wouldn't do it. Step 1, what I would do is do long-term research on an underlying company using the 100 steps that I showed you a couple minutes ago. And then once you see a stock that is a 5x5, meaning you think it might have 500% upside in 5 years, then you can buy a simplistic financial instrument, derivative instrument called a LEAP. Okay, and a LEAP basically means a call option that expires in a couple of years. And the most you can lose is the amount of money you paid for the call, I mean the LEAP. Let me show you a real example here. All right, let's do NVIDIA for fun. Okay, so I'll go over here. Let's go here to Yahoo Finance. Let's do NVIDIA. Okay, give it a second here. Actually, let's go back to the main page here. Okay, and the way you know that a company has options is if you see numbers behind the options button. I'll show you what that means right here. Okay, Tesla. Okay, so I'll click here. And then what I'm going to do is I'm going to click on the left side here, options. If you see numbers here, there are options on the stock. I was going to do a video to Tesla instead. It's fine. So what you're going to do is if you see a ton of upside in Tesla in, say, 3 years or so, you're going to go here and you're going to select the expiration date of as far out as you can, 2 years in the future here, okay? Then what you're going to do, if you see massive upside, is you're going to buy out of the money options, okay? So blue means it's in the money, white means it's out of the money, and this is where the stock price is right now. That's why it's blue there. So buy something that is liquid, okay, that has a lot of open contracts, that's way out of the money, okay, based on your target price, etc. Yeah. Quick little side note on Elon Musk. It's fascinating. So what he did was he put $250 million into the Trump campaign, helping with, the swing states, especially Pennsylvania. And that $250 million investment that he did netted him a return of $140 billion. It's like a 5,000% return on investment because the market cap of Tesla went up a lot because of that. Yeah. And it was brilliant in hindsight because if Democrats won, that's better for EV. If Republicans won, that's not good for EV, but it's helping his market cap. And of course, it's going to help with his SpaceX company, which I hope goes public very, very soon. All right. Next up, Tariq wrote, hi, Chris. What do you think about AI replacing most of the jobs in the world? Because I also study industries like marketing, AI, crypto investments, and I'm a little bit scared. Yeah, don't ever fear secular trends. Embrace them. Okay, and the same Luddites or people that are worried about everything said that when Google came out in beta in late 1998, early 1999, that, oh my God, Google's going to think for us. We don't need to do our own research. It's going to replace us. And those same people said in the fall of 2001, when Wikipedia came out, oh my gosh, this is going to do research for us. We're not going to be needed anymore. And the same thing back in the 80s when just-in-time or robotic-based manufacturing occurred. Everybody thought, oh my God, what are we going to do? We're going to be out of jobs. Many years ago, 96% of the workforce worked in farming. Don't fear technology. Embrace it. Try to be more productive because of it. Okay, cut expenses because of it. Work smarter, not harder. Leveraging AI. Yeah. Okay. With crisis comes opportunity as well. All right, give me 1 second here. All right, next up, Mac wrote, hey, Chris, you mentioned in your training that company management is the first thing to look at. How do you know if they're competent? The company I'm looking at fired their CEO, but 98%, yeah. Then I'm looking forward to start. Oh, great. Starting the MBA this Monday. Yeah. So I typically, okay, and this is controversial. I wrote an article about this in VentureBeat years ago when I worked in VC. I typically don't invest in companies when the founder has left. Because when the founder leaves a company, what happens is the company becomes very bureaucratic and doesn't take any risks. Here's why. The founder of a company, okay, like Jeff Bezos, who rarely got on earnings calls. So, and he's kind of stepped away from Amazon, which makes me less bullish on Amazon now. But the founder of the company is very long-term focused, right? And they don't care about, what the stock does on a daily basis. They're focused on 3 to 5 years out. And they've got the full support of the board of directors as well. Because the company is the founder. They can do whatever they want. The second the founder leaves, other executives are on a short leash, right? And so the other executives, the CEO, CFO, etc., they're judged on a short-term basis. How's the stock do this quarter, next year, whatever it is, very short-term focused. And because of that, within big companies, if you want to climb the corporate ladder, you're not going to take a risk. Because if you take a risk and create a new product and it fails, you're done, right? But if it does well, you get maybe paid a little bit more. And so basically this leads to, hey, let's just maintain the status quo. And the problem is I had a very good friend that worked at Hewlett-Packard years ago, and he wanted to leave. And I said, great, let me help you. And I was going through his resume, and I said, well, what are the most important skills you've learned in the past couple of decades at Hewlett-Packard? He said, well, to be honest, Chris, all I've learned is how HP politics works. And so HP went into terminal decline. The company got broken up in two because, the founders had left, right? Mr. Hewlett, Mr. Packard, yeah. Now, if the founder comes back to the company like Steve Jobs did, that's usually a very, very bullish thing. Okay. Now, what else do you look for in terms of management team assessing them? You want to make sure that the management team, the CEO in particular, the founder, can sell and get you excited. Like Elon Musk can sell. And he's such a good salesperson, and he's so controversial in some ways, that he gets free PR. Have you ever seen a Tesla commercial? Neither have I. But he can sell. Sir Richard Branson can sell as well. He gets you excited about the company. That guy oozes optimism. The same thing with Mark Benioff, who founded Salesforce.com. Cloud computing is boring, but he makes it sound awesome. He can sell. That's the most important skill set in all of business, is the ability to sell. For your companies, if anybody out there is an entrepreneur, everything you do that's not selling is a waste of time. Okay. All right. Manas, how are you from Calcutta? Great to see you. So Manas wrote, what was your day like running a hedge fund day to night? Just give me detailed advice, and please, you rarely talk about your life back then. Yeah, it was a stressful time. So in the fall of 2008, when bank machines were in 24 hours of not working, I was massively short the market in my fund, right? And so I think it was October of 2008, the market was down like 20 or 30%. We were up like 3 or 4%. And I wasn't happy. I wasn't happy because I would come into work every day and I would hope that banks would go bankrupt, the ones I was short. I would hope that industrial companies would go bankrupt. I would hope for bad stuff. That's no way to live your life. right? So anyway, eventually I morphed my hedge fund into a venture fund, invested in Facebook, etc. Then switched into venture, completely invested in Palantir when it was private, etc. And I like that because it was long-term focused. And then in terms of my origin story, why are we here today? Because I met Tony Robbins. And I introduced Tony Robbins to one of our portfolio companies when I worked in BC, and he convinced me to do this. Follow your heart, okay? Follow your dreams. If you chase your dreams and you fail a bunch of times and you don't give a damn what people think of you, great things are going to happen. Your dreams will come true and the money will fall accidentally. It always does. If you chase money and that's your sole purpose in life, then I promise you're never going to get it. You just got to be long-term focused. Don't make money your God. It's one of the 10 commandments. Yeah. All right. And then Manas wrote, Elon is all by himself, and the DOGE website is live. Department of Government Efficiency. This is going to be an interesting 4 years. Let's go there together. And he had really negative things to say about the new AI initiatives. He's very competitive when it comes to Sam Altman. Okay, let's go to DOGE website Musk. Let's see what we got here. Okay. Okay, here's the official website. All right, let's go there. Let's go there together. Give me 1 second. That's Dogecoin. Where's the official website, man? Okay, let me search for this. Website Doge. Oh, here it is. Doge.gov. Oh, this is going to be fun, man. Okay, an official website of the United States government, Department of Government Efficiency. The people voted for major reform. That's right. You are the media. Okay, so there's nothing there yet, but I'll continue to monitor that. And thank you so much, Boss SMG, for the donation. I appreciate that. Will go directly to the schools that we're building. Thank you. And then Boss SMG wrote, Hi, Chris. I recently joined your MBA program, and I love it. Thank you. You mentioned you started in tech. How was the transition from tech to finance? What code languages did you use? And should I make a 180 to finance? Yeah, absolutely. If you're passionate about finance, but don't do it just for the money. So in Silicon Valley, we always say that it's easier for an engineer to learn finance than it is for a finance person to learn engineering, right? And so if you work in engineering, which I did, I was a software engineer for 4 years back in the 90s at Accenture before I came to New York, United States. I loved it. You got to be really passionate about it, though. You got to certainly enjoy whatever it is you're doing. Yeah, you can do it. Yeah. So for me, in terms of the programming languages, I'm going to nerd out here. So I'm an old man. Okay, I turned 53, I think next week or the week after. The older I got, the better I was. I started out doing COBOL. Right. Then what I did was when I worked at Accenture, I was part of a team that opened up their first internet R&D center back in '95. So I was sent to go to Sun Microsystems to learn Java. I did C++, which I hated, Visual Basic, which I loved, which is part of my Excel program, and also teach you Python as an elective in the MBA degree program, as you know. Yeah. Don't ever do technology if you're not really, really passionate about it, because you will get nowhere. Because these nerds like me that work in tech, they love it so much they don't leave their jobs. And in Silicon Valley here in the venture capital industry, we always say the difference between an average engineer and a great engineer is literally 10x in performance because they're passionate about what they're doing. Yeah, yeah. All right. Give me 1 second here. All right. Yeah, and then Manas wrote Damodaran, the book I saw on Ken Griffin's shelf when I met with him, at NYU Stern. Yeah, he's a prof there. Yeah. Okay. Got a smoker's cough here, man. I don't smoke anymore, but I don't smoke any less. I'm just kidding. I don't smoke. I only smoke when I'm on fire. Okay. All right, Tommy wrote, can somebody who graduated from your MBA program claim they have an official MBA degree that is recognized in the markets, promoting that you have an official degree on your LinkedIn profile and resume? A lot of people write it. What I would do is, if you want, say it's not accredited. I don't believe in government accreditation. So if you want to learn more about that and why I don't believe in government accreditation, you can always go to, give me 1 second. I hate when that does that. It happens sometimes. All right, let me try another tab here. Just go to 10th mbaclass.com. There you go. And then what you can do is just scroll down past all this stuff here. And I think I made the first Q&A thing, FAQ. Oy vey. Oh, come on, Chris. Where is it? Here it is here. Is it accredited? Oh, it's the third one here. Yeah, read this here. So I won't do it. And the reason I won't do it is because governments, they'll make you have a board and they'll tell you what you can and can't teach. I'm not going to teach you theoretical crap you can't use in the real world. I'm not going to teach you supply and demand graphs. I'm going to teach you real practical stuff that'll help you immediately with your career. Yes. Yeah. And the problem with traditional business schools is they don't teach the most important skills. They don't teach you how to sell. They don't teach you how to present. They don't teach you how to network. They don't teach you how to manage your own money. They teach you how to manage other people's money. They don't teach you how to start a company. Ask anybody who has an MBA. So do you know how to start a company? They don't. I teach only practical stuff that'll help you. There's a reason, humbly, I have over 2 million paying students in every single country. Yeah. Plus, my program has a 30-day 100% money back guarantee. And I tell all my students that enroll for my MBA program, if you're not getting what you think is a 10 times return on investment in the first 30 days, ask for your money back. And I've got a 1% return rate. Yeah. Okay. All right. And then Sun Yoda wrote, hey, Chris, are you reading the chat? I am. Yeah. I'm going through it in order. Yeah. All right. And then Jordan wrote, hey, Chris, for someone who is in the first year bachelor's wanting a degree in finance, what are some resources you suggest to truly study finance? A couple things. Number one, get an ALEXA device, one of these things here, okay? And then every day when you're getting ready, like when I was in the shower this morning, do this. Alexa, Wall Street Journal news.
From the Wall Street Journal.
Llévate más de lo que esperas todos los días con el...
For some reason, it gives me ads in Spanish. I don't know why. Okay. But I want you to do that, okay, when you're getting ready every morning. That way you can multitask, and that's all you need to know. Okay, I don't want you to read any theory. You can take my courses if you want to. I have MBA students from top 10 MBA schools that say they learn more in the first 30 days in my program they did in their entire MBA at a fraction of the cost. Yeah. The most important thing for you, though, if you want to work in finance, is you got to start networking like crazy. Okay, do this at the beginning of your undergraduate degree. What you're going to do is set up a great LinkedIn profile, as we talked about earlier. Then do an advanced search on people that graduated from your school that work at Goldman, Morgan Stanley, or whatever firm it is you want to work at, and get informational meetings with them. And if you want to work in investment banking, it's got to be between your third and fourth year. You have to do an internship, and you have to apply in your second year to do that. So start networking today. Yeah. Okay. All right. Next up, Manas wrote, Mexico and Canada are getting the tariffs at 25%. Yeah, and Trump hasn't announced yet. He might by February 1st, he implied. But China's only 10%. Why so? And what is the buzz, the Panama, yeah, all that stuff. Yeah. In terms of Canada becoming part of the United States, yeah, which I hope doesn't happen. Yeah, so the reason why Trump is not going after China and raising rates more is because there's a great symbiotic relationship between China and the United States, right? So a lot of your phones, technology equipment, etc., think Apple, are made directly in China at a cheaper cost for us. When it comes to Canada and to a lesser extent Mexico, President Trump says that they subsidize a lot of the imports from Canada to the extent that it's helping Canada more than it's helping the U.S., right? And so, Trump's entire methodology is put America first. Yeah. Will the tariffs be 25% or higher for every single product for Canada? No. This is just posturing. Now, the way that Trump works, and one of the reasons why he's successful is what it is because he can get a deal done. Now, usually when people negotiate, one party says, I want this, other party says, I want this, they meet right here. With Trump, one party says this, Trump says, I want this. I'll be back in a couple minutes. And then they meet a little bit closer to Trump. You get what I'm getting at there. Yeah, you can get a deal done. Just read his book, Art of the Deal, back in the 80s. Okay. In terms of Canada becoming the 51st state, it's not going to happen. Just look at Elon's tweet when it came to Justin Trudeau, which I loved. Actually, I can't go there. I'll get canceled. I don't care if I'm going to get canceled. Screw it. I'm going to be myself. Yeah. And one of the reasons why I don't have more subscribers on YouTube, because I speak my mind, right? And so YouTube, I don't know if I've opened up to this to a bunch of you, but a couple of years ago, before I go to that tweet, let me tell you what happened with YouTube, my channel. Okay. So a couple of years ago during the pandemic, I got vaccinated. right? I got the Pfizer one, but I had a doctor, one of my MBA students from the Midwest, really nice guy. And there's an unlisted call with just a handful of people on it, okay, like this call here. And he just expressed why he doesn't believe in vaccination. And then what YouTube, and this killed me. So what YouTube did was they issued me a warning, okay, which was terrifying at the time. They said, this is a warning on your channel for medical misinformation, okay? And they made me take, they said, do it again, you'll get a strike. Then they made me take an exam a year or two later in order to get rid of that warning. And I realized at that point in time that social media, when it comes to freedom of speech is a government thing. It's not a social media thing at all. And it broke my heart. And I'm glad that Elon bought X, because that kind of forced social media not to be too focused on one side, so to speak. And even today, Zuckerberg met with Trump, and Zuckerberg came out on the Joe Rogan show. Great show. I love it. And he basically said, look, we were too biased towards Democrats. And so he indirectly said this, we're going to be a little bit more open to cover both sides, right? You need to have differing opinions. The media can't just be too focused on the Democrat side. And what the media got wrong, and you are the media, what the media got wrong is the media was too focused, I'm not going to get too political here, on Democrats, right? And the media thought that the whole country was Democrat, okay? And so if you look at CBS, ABC, NBC, CBS, ABC, NBC, as well as CNN, really left-leaning towards Democrats. And then you had Fox, which is more right-wing towards Republican. And so you have 80% of the media, not an absolute number, but 80% that was basically representing the country as being really left-leaning towards Democrats, right? And the same thing with social media as well, until Elon bought Twitter. And I think it's heroic that he did that as well. And for people out here on the left coast where I live, I'm so sorry, the West Coast, that hate me for saying this, let me put it to you this way, okay? It's good that we have differing opinions. If everybody had the same opinion, that's not a democracy. And that's not freedom of speech. So I'm happy that we have more representation now, the left and the right with social media. And this is one reason why I don't have more subs as well. Yeah. But I don't care. And I've taken one endorsement of my channel over the years, which I stopped. Okay, so I've had 500 or more people reach out to me, or companies to endorse my channel, give me money, sponsor, and all that stuff. I don't want to do it though, and I caved in. I did it with a company called Seeking Alpha a couple months ago. I stopped that though because it's not fair. I want to provide you all with my humble thoughts and be completely transparent. If I'm too focused on a certain product because I'm being sponsored, it's not good to you. And it's not about money for me. It's about me serving you, my students, my customers. Yeah. Anyway. Okay. Last thing I'll say in that is, if you're a video gamer like I am, you'll notice that on websites like IGN, when you see like a review on Halo, right, the reviews are really high. It's because Microsoft advertises on their website. You know what I'm getting at. Yeah, I don't want to be biased. You are the media. Okay. Give me 1 second. Okay. True wrote, he ain't reading no chats. I'm reading everything here in order. Yeah. Okay. Manas wrote, I got to go to that Trudeau tweet. Okay. Just reporting the news here. Musk Trudeau tweet on Canada becoming part of the U.S. Okay. Here it is here. All right. So Trudeau wrote, I don't want to get a strike here for copying something, but here it is here. Okay. So Trudeau, who's no longer Prime Minister of Canada, or won't be soon, thank goodness, he wrote this: there is no snowball's chance in hell that Canada will become part of the United States. Workers and communities in both countries benefit from being each other's biggest trading and security partner. I agree with that. And then let me pause on the site. You'll see here the retort from Musk right here. Anyway, he wrote this here. You can read that yourself. Okay. We live in interesting times, eh? All right. Next question is, what about cryptos under president? He has his own token, market cap billions of dollars, highly volatile. Is it worth not investing just ethics-wise? Yeah. Yeah, I don't want to go there. But when it comes to investing in cryptocurrencies in general, I've said this since the beginning of cryptos, when I first started joining crypto boards back in 2013. 99% of all cryptos are a scam. Okay. You have to do the research and never have more than 5% of your portfolio in cryptos and no more than 0.5% in any one particular crypto. I set up a Bitcoin IRA many years ago. Yeah. And I'm kind of holding that forever. Yeah. And I've always disclosed the cryptos that I own since I started teaching about crypto mining, all that stuff years ago. The cryptos that I own, I haven't sold, I'm never selling, are as follows. Okay. Do your own research though, please. Bitcoin, of course. Ethereum. Also Litecoin, which is like Bitcoin's little sister or little brother. And then Ripple. Yeah. Okay. All right. Nelly wrote, bonjour, Chris. Bonjour. Je veux faire le classe matinée. Okay. Parce que je suis malade. Un peu. So Nelly wrote, how do you approach decision making when facing tough challenges? Yeah. Yeah. A couple things. You have to quantify your decisions. So what I recommend doing is exactly this. And I'm going to show you how to answer a very tough question by quantifying it using Microsoft Excel Hell. So let's go together to Excel. And what I recommend doing is exactly what I do here. So let's say that you've got two choices. One is join Goldman, okay, as a banker. Or the other choice is, say you get a job offer from McKinsey Consulting, okay? You got to quantify everything. Okay, it's the fork in the road, which you choose. So what you're going to do is you're going to write down all the criteria here, and then you're going to score it out of 10. Let me show you what that means. So first of all, money is the question. Well, at Goldman, you'll make more. Okay, so let's say that's 9 out of 10. At McKinsey, it's, I don't know, 6 out of 10. Okay. Then we go stress. Well, Goldman is finance. It's more stressful, so make it lower, make it 2. And then McKinsey is less stressful, make it 8. Okay. Then we'll write here travel. Well, you don't travel as much in investment banking. You're usually just a model monkey. Okay. So I'll make this 9 out of 10. But in consulting, you always go to where the war is, right? You always go to the client site. So I'll make that a 2 out of 10. Okay. Then what you can do is just sum them up. Okay. Whatever's the highest number is the choice you're going to make. So the sum here in the bottom right-hand corner is 20. The sum here in the bottom right-hand corner is 16. So you're going to join Goldman, for example. But what I would do is when you have a tough decision to make, I would make a list of like 50 questions. Yeah. Yeah. And then once you decide on what to do, path A or path B, then what I want you to do is sleep on it. And if you feel the same way the next morning, then do it. And never just take a job because, like, don't just figure out how to get a job. Always ask yourself why. Why do you want that job? Is this going to make you happier? Is this going to help you start your own company one day, etc.? Don't just figure out how. Figure out why first. Yeah. And my humble job here in my MBA program is I feel like I'm your waiter. Okay. And when you go to a restaurant, and this is where I proposed to my wife in Paris, but when you go to a restaurant, you look at the whole menu, but you only choose 2 things to eat. And so my humble job, serving all of my clients here, my students, is to expose you to lots of different careers in business. And you choose what you're most passionate about. And the way you know you found your passion is if I tell you this. For the next 30 days, you can't travel and you can't go to work and you can't go to school. What are you going to do with your time in the next 30 days? Whatever that is your purpose, your passion, your raison d'être, Nelly, and that's why you were put on this earth. And that's what you have to go after, no matter what anybody thinks. Yeah. All right. All right. Next up, Aloju wrote, thanks, Chris, all the way from Nigeria. We're building our next school in Nigeria as well with my students in my MBA program. He wrote, this is actually my first time on the call. Welcome. Hope you join us again. I really have an interest in owning a hedge fund, but I don't really know how to start any guidance. Yeah, so first of all, you need a track record. So what I would do is I would work for a hedge fund or an asset management firm, work as an analyst, get promoted after a while to portfolio manager, have a track record, and then start raising capital. Yeah, and I've raised and managed over $1 billion in my career. I can help you with that as well. Now, your goal, it's going to take you a minimum of 5 years to make that happen. If you want, you could check out my MBA program at this link here, and I'm happy to walk you through it in more detail. Yeah. Okay. All right. Next up, Nars. Great to see you. First time I've seen you on the call. Hope you join us again. Wrote, Chris, I always forget you're a dad until you use the MBA joke. Yeah, married but available. Yeah. Dude, they grow fast, man. For anybody with kids, like by the time they're 12 years old, statistically, you've already spent 90% of the time you're ever going to spend with them. So make them come on vacations with you when they're older. It's like forced family fun. That's what I'm doing with my kids as well. They grow fast, man. Yeah. That's why we're here. And for those of you who don't have kids yet, it's so hard for me to explain this to you, but you will realize true happiness in life only when you hold your child for the first time. It unlocks this ridiculous euphoric feeling. I can't explain it, but it kind of puts everything into perspective, like why we're here, etc. They're a pain in the neck too. My youngest one is 14 now. The other day he opened the fridge. He opened the fridge and he goes, "What the hell, man? All I see in here are ingredients." You know what I mean. Okay. Next up, Mike wrote, when Buffett retires, who do you think will run Berkshire, and what level of confidence would you have in Berkshire after that? A lot lower. There's only one Buffett. Yeah. Apparently he's grooming his successor right now, but I don't know much about it. Yeah. What I would expect is over the next 5 or 6, if he's still with us, I hope he is. He's in his 90s. But over the next 5 or 6 annual events he does, he'll probably have whoever his successor is as a keynote speaker, just to gain confidence for everybody else. Yeah. Okay. And then Hayscal wrote, I just want to say I love your course on stocks and options in Udemy. Thank you. Okay. All right. And then you wrote here, I just got into trading, and that is the most complete course I've ever come across. Thanks. I love what I do. Make sure that you focus on fundamentals first, valuation second, and a distant third, hey there, is technical analysis. Yeah. Don't day trade. It won't work. I promise you. All right. Next up, Manas wrote, where is green energy going with drill, baby, drill, which is what Trump said. He wants to really focus on energy sustainability in the United States, to the extent that the United States has more liquid gold, as he calls it, oil under the ground than any other country he says, at least. Yeah. Where do you think solar is going with drill, baby, drill, Japanese EV or Indian EV or Vietnamese EV? Yeah, and also solar powered, yeah, in the next 4 years. Yeah. So I would say that, so you all see the same news I see. I don't want to get political here, but Trump pulled out of the Paris Accord on the first day when he signed those 100 executive orders. So I think what that does is, from an environmentally friendly or sustainability perspective, kind of pushes back our goals as a planet when it comes to reliance on EV. I think we'll get there still and not really be relying on oil in the long run, but it's going to take longer. Now, a very famous Saudi Aramco executive once said, the Stone Age did not end because they ran out of stones. I don't know what the hell that means, but it made me sound smart for a second there. But I think there's eventually we will not be reliant on oil, in 50 years from now, I guess. Yeah. Okay. All right. Give me 1 second here. Yeah, and Mac wrote, there's a 3-day summit from Tony Robbins. Anyone's interested. It starts on January 30th, I think. Yeah, do it online. I think it's between 11 and 2 p.m. Pacific time. Yeah, it's worth it. But try to go in person if you guys can for UPW, meaning Unleash the Power Within. It's the best investment you'll ever make. Way better than any of my courses. That much I promise you. All right, JK wrote, 50 is not old, Chris. Thank you. F me on 52. It's interesting because the average life expectancy today is 26 years longer than it was in the 1950s. So I'm not 52, I'm 26 with the maturity of an 8-year-old. Yeah. And you all know that when GTA 6 comes out later this year, I hope, knock on wood, if ever, you ain't going to see me for a month, okay? I'm going to be so geeking out on it. Yeah. And right now I'm playing Mafia Definitive Edition. I'm a Mafia 2 now, just to get my fix for GTA. Okay. All right. Sergio wrote, hey, Chris, does your MBA certified as an institution? I'm thinking about doing a master's for investment funds industry. Is it better to have a master's or a CFA? Yeah. I will never do accreditation. And my company is not a degree mill. My company is where you learn stuff you can immediately apply or your money back. Yeah. In terms of should you get a master's or a CFA for the investment industry, I think the CFA is probably better. So an MBA is not a professional designation. It's not like a law degree or a medical degree, right? A CFA is great. For those who are not familiar with the CFA, it stands for Certified Financial Analyst Designation. It takes you 3 years to get it. You write one exam each year. And the best way to study for it, if you want, don't buy their textbooks. They're way too expensive. When I did level 1, it was like $800, which Goldman got for me, which I sold on eBay. But instead, maybe, I don't remember. But instead, what you can do is buy what's called the Schweizer books. Okay, it's just a set of books that summarizes everything so you can work smarter, not harder. Schweizer is owned by Kaplan, which is owned by the Washington Post, which is owned by Jeff Bezos. But just do a search on eBay on Schweizer CFA books, and don't pay more than $50 for the used ones. Yeah. Yeah, and level 1 for the CFA is kind of a repeat of what you learn in finance in business school. Levels 2 and 3 are much, much harder. Yeah, a little bit more fixed income stuff as well than what you learn traditionally in business school. All right. All right, next up, Sergio wrote, hey, Chris. Okay, that's the same question. I just had a senior moment there. I almost read it twice. The older I get, the better I was. Okay. Jason wrote, do you teach negotiations in your MBA program? I teach you sales in a lot of detail. Okay, so that's kind of like negotiations as well, right? I teach you how to sell, when to stop selling. The second you sense somebody is interested in your product, stop selling. Okay, especially in an interview. Otherwise, at first, they'll start thinking this. When you're selling to them yourself or your product, whatever it is, they'll think this. They won't say it. Yeah, I kind of like this guy. Yeah, I like what he's selling. Yeah, wait a second. Why does he keep selling it? Am I missing something? Why am I so lucky to be given this opportunity? Eesh, I'm not buying. Stop selling the second you sense they're interested. It's like dating and selling. There's a lot of similarities in networking, right? If you come across as too desperate and you keep selling, you ain't going to get a second date from the man who doesn't know how to date. Yeah, my wife's way out of my league. All right. And this year, what I'm adding to the MBA program, in addition to that AI investing course coming out by the end of Q1, what I'm also adding is massive elective, only for my MBA students, that's going to teach you how to sell anything online. A lot of it using technology, meaning products like Go High Level, and many, many more. Yeah. And my close rate, whenever I get one-on-ones with people that want to buy my products, is 90%. I will teach you how to sell. And I just hired a salesperson that's going to take away a lot of the selling stuff for me as well. Probably take a month to get him up to speed. Yeah. Okay. All right, Simi wrote, what advice do you have when it comes to trading? The advice I have, and I say this with all my heart, is don't do it. There's not a single successful day trader that's been successful in the long run. How do I know? We can't name them. Every month has 20 weekdays, meaning 20 days the equity or stock markets are open. You can't predict that. Like, I have no idea. I don't know what Trump is going to say or Trudeau that's going to make the market go up or down for Canadian investors as well. I don't know what what Nvidia is going to say or semiconductors are going to say. It's going to cause semis to go up and down in the near term. I don't know. You got to be long-term focused always. Yeah. And in becoming a day trader, okay, there's nothing wrong with swing trading, like 3 to 6 months looking at the relative strength index, see if stuff is overbought or oversold. But day trading is commensurate with going to a casino. The odds are against you. And the worst thing that can ever happen to you if you go to a casino is the first time you go in, you make money. And you think it's repeatable, but it's not. By the same token, or chip, sorry. If you day trade, the worst thing that can ever happen to you is you make money in your first day trade. It's not sustainable. I promise you. And a lot of people think all these great hedge funds, they day trade all day. They don't, unless they have insider information, which is kind of what's happening in the TV show Billions. And I'm making my next Billions vlog next week for those that follow that. And I'm also working very hard on The Big Short. It's taken me a while to put this one together, as well as Wall Street Part 2. And Donald Trump actually had a cameo in Wall Street Part 2, and they removed it last second. I'll talk about that as well in those upcoming vlogs. Okay. Manas said, if Trudeau comes to you for a job, will you hire him, keeping all your friends aside? Oh, God. Well, he was a teacher, right? So a lot of people in Canada are wearing the red hat that for years said, make Trudeau a drama teacher again. And those who can't do, teach. And those who can't teach gym class. And I suck at sports, so you're all out of luck. I'm just kidding. I would not hire him. Yeah. I believe in capitalism and democracy. Yeah. And what he did with COVID in Canada makes me sick, right? People lost their fundamental freedoms in Canada. It killed me. You know, I had family members that they tried to go outdoors in their car, and the police pulled them over and fined them for each one of the kids in the car. Ridiculous. And that's why I love that Canadians all stood up, at least a lot of the truckers in Ottawa a couple of years ago, and said, enough is enough. You know, he was basically forcing these truckers to get vaccinated, even though they don't talk to anybody. They don't see anybody in their trucks. Yeah. And I'm more of a libertarian. Yeah. Yeah. And during COVID, in 2020, I did a ton of one-on-ones with my students. And I felt so bad. My business went up materially. So I made all my courses free, and everybody in my MBA program that year that was on the payment plan, I said, look, you get it for free. But I did tons of one-on-ones, confidential one-on-ones with my platinum students from many different countries. And many of them said, sir, and I said, no, call me Chris. They said, we don't have any freedom. You know, if it's 7 o'clock at night and I'm outdoors, you know, the police beat me with a stick in a lot of countries. Not Canada, not America, obviously. But it broke my heart that all these fundamental freedoms were taken away. And usually when governments get more power, they don't give it back. And that's probably why, one of the reasons why you had so many upset, surprise victories when it came to political, elections globally, in terms of more right-wing people getting elected. We lost our freedoms, especially with COVID. And who's the government to tell me I have to get one of these things? Get out of my house, government. Yeah. And as you can tell, I'm more of a libertarian. I hate anything that takes away the amount of success one of my students can have, like a glass ceiling or whatever you call it. Yeah. All right. Opinionated today, right? Okay. Expect more of this. All right. Next up, Boss SMG wrote, hey, Chris, regarding creating content, any tips how I can get better at it? And what tools should I use? Thank you for everything. Yeah, thanks. Yeah. So I started using Sora recently. Okay. So whenever I create videos, what I do in all of my long form videos, right, the portrait, the landscape ones, I make myself and I edit myself. I love it, so fun. All my shorts, I have Jean-Marco Lubiana, one of my amazing contractors in Canada, to take care of. But the great thing about Sora, for those of you not familiar with Sora, it's OpenAI or ChatGPT's new video service. And what you can do is you can now use Sora to make little videos. And I love that because in the past, meaning up until now, I would have to pay Adobe way too much money to license videos to show as B-roll. Let's look at Sora together very, very quickly here. We won't be able to render too much because it takes a bit of time. But let's go here to Sora Chat GPT. This is now available. Okay. All right, so you can now do it. Start now. Okay. And this is unbelievable because this is some of the videos I made for a college just did. I wish I have a practical MBA. See that? But this is putting Hollywood, they're terrified. Like even Tyler Perry, who makes great movies. I love all his movies. He recently canceled a $1 billion CapEx deployment in hot Atlanta because of Sora, right? But this is going to, yeah. So here I wrote, I wish I had a practical MBA. See this? So I entered in this exactly. 30-year-old male working in finance who's frustrated because he's not getting promoted because he doesn't have a practical MBA. It took a while. And this one here, you'll see, look at the guy's hair. It kind of got messed up. Okay, watch this. See the hair at the back on the right side? He's got an extra hand. It's creepy. So it's not perfect yet. It's getting a lot better. Ooh, he grew a finger right there. That's kind of scary. Eesh. But you can play around with this if you want to. You can pay a premium price as well if you want as well. So let's do one right now. 16 by 9. Okay. So let's say you're making a YouTube video, and you want some B-roll. Okay. So show me an options trader trading Tesla, and he is so happy as he is making money on calls. Okay, so we're going to generate this. It's going to take a little while, added to the queue. If you pay more money, it gets done faster. But if you're making content online, you got to check this out here. Yeah, it's fun. It's fun as well. Yeah, and soon you'll be able to, like for me, I've done 7,000 hours of virtual instructor-led training on YouTube, right? A lot of it's unlisted videos. And so I'm working with a very well-known, I can't disclose, AI company here in the Bay Area. They're beta testing with me. And they've taken all that stuff and fed it into a large language model of me teaching. And you wouldn't know the difference, except for the dad humor. The AI doesn't have a sense of humor. All right, so this here is rendered. Oh, here we go. It happened already. All right, so here we go. Let's see here. So this is it here. You can only do really short clips, like 5 seconds. But this guy here, I don't see Tesla in here, maybe for copyright reasons. But he is happy because he's making money on Tesla. You know what, dude? I'm going to start using it. So I'm releasing my next vlog next week. It's going to be season 3, episode 4 of Billions. And I'm going to use a lot of Sora as well. And you guys can check it out. Kind of neat, eh? How fun is that? Yeah. In terms of other ways to become very successful on social media, you got to be consistent. Like for me, for example, look, I make a lot of mistakes, but I'm consistently bad or consistent. This is the 303rd weekly webcast I've done. And you got to tell yourself, I'm not going to be perfect. And as Salvador Dali said, a great painter, if you strive for perfection, you'll never reach it. And as Reid Hoffman, the legendary co-founder of LinkedIn and a partner at a venture capital firm called Greylock, said, if you release your product when it's ready, you've missed the market. So don't try to strive for perfection. And I want everybody in this call to start making YouTube content today. And the reason I say it is you've got a 3 to 5 year window of opportunity to do it, to establish the brand of you. And if you don't do it, then AI is going to replace us. There's going to be new brands that are created, like better looking versions of this that speak more gooder and stuff that will start teaching. So you've got 3 to 5 years before AGI, artificial general intelligence, becomes a reality. Start making content today. Okay? Be consistent. 1 per week. Work smarter and not harder. So what I do with this weekly call, as many of you know who've been with me for the past 6 years, is after the call is done, a couple hours after it's done, what happens is if you go to the description, you can see all the questions asked and click on them. And I have a team that will create, Instagram videos, TikToks, whatever, LinkedIn's, other videos and other platforms. And they repurpose everything. So there's nothing left on the carcass. This weekly call carcass by the time it's done. And this weekly call, not everybody knows this. I haven't promoted this very much, but for years, it's been on all major podcasting systems. So you work smarter and not harder by repurposing all your content. The same thing with articles on LinkedIn. And I recommend everybody write a book. So my strategy when I worked in venture capital years ago was I wrote 1 article on LinkedIn every week for 2 years. That's about 101 articles. Then I repurposed all that stuff into a book. And the first chapters were the articles that got the most clicks, likes, whatever, controversial. And I can give you guys, if you want right now, the template for this book. So everybody write 1 article per week and then publish a book. I'm going to give you this template right now. Okay. And if you think it's too much work to publish a book and bring to your next interview, ask yourself, how badly do you want that job or customer? So I'm going to go here to harounmba.com/write-book, all one word. And all you got to do is click here. I don't ask for your email or nothing. Okay. And then all you have to just complete this Microsoft Word template here. 1 page of instructions. Teach you how to publish on Kindle, Amazon Print, as well as ACX, which is Audible. Everything is here. It's 6 by 9 inches. And you right click on the table of contents to repaginate. Get it now? Go to harounmba.com/ all lowercase, write book. Yeah. And remember to repurpose your content as well. Yeah. And dude, when you're doing your YouTube stuff or social media stuff for your question, Just be yourself. Even if you make mistakes, you're more lovable that way. It's kind of like when you watch somebody giving a presentation on stage. If they mess up, you like them more because they're just being you. And that's why it's called YouTube. You be you. You do you. It's cathartic. It's therapeutic as well just to be yourself. Because as Dr. Seuss said, everyone else is taken. Okay. I'm shocked I have this much energy given how sick I am. All right. All right. Yeah, and also in terms of your YouTube content, like the great thing about me, humbly, is I've got, I've had these, I have kids, and I've watched how they consume media their entire lives. And the way that they communicate with each other and their social media tools you're going to be using when they're my age has not been invented yet. So try to be early, try to be first on whatever the next platform is that's going to matter. But when I watch them consume media, they have the attention span of a gnat, just like me. So what I want you to do is I want you to watch videos from Mr. Beast. Okay, Mr. Beast, you never get bored, right? He's always thinking, every 2 seconds, how do I change the music, the image, whatever he's doing to make it more interesting? And before he makes any of his content, what he does is he creates the title and the thumbnail before he creates it. And I learned all of this from a guy that wrote a book with Mr. Beast named Daryl Eves. There's a good book on YouTube on Daryl Eves and by Mr. Beast. I want you to read. And I actually applied to Daryl Eves' program, and I was part of it. And he helped me a lot with my YouTube content as well. Yeah. And things change over time. And don't develop your own thumbnails, please. Get somebody else to do it. I sucked at it for years. And I realized I have to outsource it. And the reason you have to outsource thumbnails to Fiverr.com, which is what I do, and I can tell you who I use if you want, I can show you, he's awesome. But the reason you have to outsource that is because we can't keep up with fashion trends. I'll give you an example. I don't know if bell bottoms are going to be in style next year. By the same token, when it comes to thumbnails, styles change all the time. Let an expert do it. Outsource it. Yeah. All right. Yeah. All right. And I will have to wrap this up pretty soon. For those of you in my silver MBA degree program, and I'm going to change the backdrop. For those in my silver MBA degree program, this is like a GTA background. I will see you guys at 10 a.m. today for our weekly 1 hour Zoom call. And if you're in my gold, platinum, diamond, it's a 3-hour Zoom call. Okay. Okay. All right, next up, Manas wrote, SoftBank and OpenAI are sidelining Microsoft. Also, Elon is mad at Sam Altman. By the way, Zai is free. Yeah. So what you're referring to is at the White House yesterday and the day before, there were 3 people there presenting to Donald Trump with this new Stargate $500 billion AI initiative. One was Masayoshi-san from SoftBank, as well as Larry Ellison from Oracle, as well as Sam Altman. And what Elon is saying is that it's bogus what they're doing. It's bogus because he's competitive with Sam, obviously. But he's saying they only have $10 billion. They don't have $500 billion. Yeah. Okay. And then JK wrote, hey, Chris, there's a big difference between opinions and misinformation maliciously intended to hurt others. Yeah. And then you wrote, was that Justin's new dance studio? In the Elon Musk comments you just showed, it could be. Yeah. I didn't read the tweet, but you could read it. Yeah. Okay. All right, moving on to Sean, who wrote, hey, Chris, thanks so much for the information and videos. You're most welcome. They're awesome. Thank you. Question on career paths. Do you see a path from wealth management, meaning private wealth management, into working for a hedge fund, if at all possible? It's possible, but it's tough because PWM, meaning private wealth management, you're kind of known as an asset gatherer and a salesperson, right? And you collect as much assets as you can. You charge a 1% fee every single year on the assets. Whereas if you work at a hedge fund, let me go to Manhattan in the background. If you work at a hedge fund, you're more of a bottoms-up stock picker. You can do it. It's going to take a lot of networking. I don't advise doing it, though. And the reason I don't advise doing it is because private wealth management is the best job you can get in finance. It's the best job in all of finance because it's the only job where you can work in PWM, meaning private wealth management, which means being a broker for really, really rich people. You can work in PWM at a big firm like a Goldman, and every 2 years leave, take your clients with you, and join another firm like Citi. And then leave 2 more years from then to Deutsche Bank to get a golden parachute. You can take your clients with you, and it's your own business as well. Yeah. Okay. All right. Next up, we got Patrick De La Cruz. I love your last name. It reminds me of that baseball player who had 67 stolen bases this year. Ellie De La Cruz, I think his name is. Yeah. You're a good day. I currently work as a research analyst in M&A in FactSet. Okay, cool. I've done Wall Street Prep Financial Modeling course. May I ask if I can use it to get into a boutique M&A? Yeah, I'm very familiar with that at Wall Street Prep. They actually contacted me to have me teach on the platform. Doesn't work for me though. I want to be independent and only focus on you. Yeah, they're decent, but I'd really ask them how to network, and a lot of it is up to you as well. Step 1, make an amazing LinkedIn profile. I teach you in my MBA program. Step 2, set up a ton of networking meetings. That's the only way you're going to get the job. Now, if you're an undergrad right now, like my son Andrew, the super days are occurring right now, right? So he just interviewed with Goldman, Morgan Stanley, Moelis, a bunch of others, and that's not for this summer. It's for next summer, like 2026. And the reason why it's done that way is because the investment bankers want to get the best talent before the consulting firms and other firms do. So you got to start now. Yeah, if you're an undergrad. Yeah. If you're not an undergrad, just set up informational meetings. Yeah. And then Manas wrote, that's his son, Howard. Yeah. And I've got lots of stories about him. Yeah. He used to live here. And he worked for a buddy of mine at See's Candy out here. Yeah. I'm not going there. Okay. Jazzy wrote, hey, Chris, good morning and happy Thursday. I'm Jasmine. We're going to have an office hour today at 11:20. We are. And what you can do, Jasmine, is I'm actually going to start at 10 a.m. Okay, so you can use the same Zoom link we always use. And so office hours, 10 until 11 Pacific time is for silver. Then 11:20 until 1:20 is for gold and platinum and diamond. So just use the same Zoom link at 10 a.m. It's more than 3 hours every week for life, even after you're done the program. Yeah. And I'll wrap this up in a couple of minutes. Yeah. Okay. Okay. And Hassan wrote, hello, Chris. Good to see you. Likewise. Okay. Manas wrote, why is EA Sports in the game? Down 18% now. And also, separately, why do rating agencies have so much power to plummet stock so quickly? Not rating agencies, more so sell-side firms. So what happens is when a company reports earnings, a sell-side firm, which has sell-side analysts like Goldman Sachs, Morgan Stanley, etc., if they don't like the earnings, and if earnings are really, really bad, when EA, for example, reported, what that means is that the EPS estimates in their model in future years might go down, which means their target price goes down, which means they downgrade it from a buy to a hold, which basically means a sell. They don't go to a sell rating usually because they want to get banking customers. And I could talk about that in more detail if you want me to. I'll take a look at EA. Right now, ticker used to be ERTS, and then they changed it to EA. I've been in their headquarters many times here in the Bay Area in Redwood City. Very tough place to work. Yeah. And no organic growth. Organic growth has died there. Why? Because the founder is no longer there. All right, down 17%. I'm surprised this company's still independent. Yeah, Microsoft certainly can't buy them for antitrust reasons. But it's really the only pure play left, that and Take-Two. Interesting. Okay, yeah, so revenue forecast is worse than expected. Okay, so it wasn't earnings as much. They forecast worse than expected revenue. That's it. Yeah, and what happens in your financial model is if they provide worse than expected revenue guidance, okay, what that's going to mean is for future quarters, you're going to make you're going to make your estimates lower, okay, and that is going to lead all the way down to the bottom line, meaning income statement forecast. It's going to lead all the way down to the bottom line, lower earnings, EPS as well. And I could go through in more detail, but yeah, it's okay. All right. Okay, and Manas wrote, thank you for everything, my mentor. Chris, please. See you in a few minutes. That's right, in the silver program. In the house of Habibi. Thank you. The Haroun house of Habibi. God bless your family forever. And let's make Trudeau a drama teacher again. I love it. Yeah, I'm looking forward to chatting with you. Yeah, awesome. All right, moving on to Peter C., who wrote, hey, Chris, wondering if EV will be like renewable energy situation here in Australia. Both major parties trying to delay transition, but the general public is huge on rooftop solar, etc. Yeah. So solar, which I have on my roof, solar would only exist. It only exists because of subsidies. That's the only reason. And I believe in the environment. We have a Tesla and all that stuff and solar on the roof. But I usually don't invest in companies that are highly subsidized. And I'll give you an example. So in 2008, when we were within 24 hours of bank machines not working, solar companies got murdered, like First Solar, ticker FSLR, etc. And the reason they got murdered in 2008 was because the only reason these companies were doing well was because of massive government subsidies. And Spain, for example, which is a massive solar market, they cut almost all their subsidies in 2008 so that the country wouldn't go bankrupt. So I don't really like investing in companies that are only relevant because of government subsidies. I believe in Darwinism when it comes to companies surviving and standing on their own 2 feet. And the best example I can give of this is Japan. So after World War II in Japan, and Michael Porter wrote a great book about this in 2001 called Can Japan Compete? But after World War II, what happened in Japan was the entire economy was in shambles for obvious reasons. Okay, and the Japanese government created incentive programs to prop up every sector of the economy. Logical, right? They gave money to every sector of the economy except for 2 sectors. One was autos, and the other was consumer electronics. And the most successful Japanese companies, are largely, autos and consumer electronics. So I don't believe in massive government subsidies. I believe in Darwinism. Yeah. Okay. And then Coriolanus wrote, do you think the value of the CFA will increase or decrease over the next 5 to 10 years? I say increase. And the reason I say it is because I think that MBAs, as an official degree, the value is going to decrease. Right? And if you look at the Wall Street Journal, they had an incredible article. And I'll show you, actually, I pinged the Wall Street Journal author on this. But they had an incredible article saying that I think it's close to 25% to a third of Harvard Business School students can't get jobs now. Let me show you. Okay, give me 1 second. I can't keep up here. Okay, hold on 1 second. I'll show you. This is going to blow you away. Yeah, I have so many messages here. All right, let me do a search here on Journal, Wall Street Journal. Okay. Wall Street Journal. MBA. Oh, here it is here. Yeah. Okay. So Lindsay reported the Wall Street Journal. She had a great article. And let me show you it here. And then I'll come back to what I wrote her. Okay. So her article basically showed that people are not getting jobs anymore. So let me go here. Let's go to all of her posts. She's got a lot of posts. She's a journalist. She's a good one too. Very good. Yeah. All right, let me go down here. Here it is here. Okay, yeah, good. All right, so right here, she wrote here, these are MBA graduates without jobs 3 months after graduation, right? Look at the trend. It's brutal, right? So Harvard, it's actually 23%, MIT, and these things cost you over 100 grand, sometimes 200 grand to get as well. And so I wrote this to her as well, and this is one of the reasons I've been in lots of newspapers, because I do what I'm showing you right here. So here's some quotes. So Elon Musk said this of MBAs, traditional MBAs. As much as possible, avoid hiring MBAs. MBA programs don't teach you how to create companies. Our position is to hire someone in spite of an MBA, not because of one. Peter Thiel, the best venture capitalist in history, said, never hire an MBA. They will ruin your company, right? And these are all traditional MBA programs. So I really think that MBAs are in secular decline, as well as universities in general. I think that in my lifetime, in a couple decades, I think that only 20 or 30 universities will exist. And I think what's going to happen is people are going to say, I'm only going to get a degree from university if it's a great name like in Oxford or Cambridge or Stanford, Harvard, whatever. And the reason I have this problem in my hand is because I think what's going to happen is initially a lot of universities are going to deplete their endowments completely, stay alive. And then there's going to be a kind of Hail Mary strategy to try to get graduates and alumni to donate as much money. And then there will just be no life jackets left. And so I think university as we know it is in secular decline. Alexa, stop. Okay. I know that there's more questions. Let me see if I can answer a couple of them quickly. And then if I don't answer them, either join my MBA program, ask me in 5 minutes on the silver Zoom call, or gold or platinum or diamond Zoom call, or you can ask me next week. Let me see if I can get through a couple more here quickly. Okay. All right, so I wrote, do we invest in government-subsidized businesses? Per my answer before, no. I don't, at least. And then JK wrote, blessings to you, Chris. You do sound a bit rough. You're just helping you feel better. So thanks. And I always feel way better than I sound. Thanks. I rarely get sick, maybe once a year or something. Yeah. But in 2021, during COVID, man, I felt like death at one point. And I should not have done the weekly webcasts. Yeah. Actually, I got COVID, but I got just as sick by taking the Pfizer vaccine. I'm going to shut up about COVID stuff now. Okay. Christian wrote, hey, Chris, always good to see and learn from you. Thank you. Thank you for the educational content. I'll be joining the MBA program soon. I'm still saving up. Thank you. Yeah. Awesome. And I think we might do another one. So this is the 10th one-year program. I usually do one in May as well. I don't know if I'm going to do May because I'm going to be over in Serbia at a wedding. But if you're interested, just go to. Actually, that's the wrong one. Let me go to. If you want a coupon, yeah, I think we have a couple coupons left. So if you want to get it on sale, go to 10thmbaclass.com. Yeah, and then you get $500 off. Yeah, you can do it through here. So again, go to 10thmbaclass.com. Okay, and then you can don't go to the link you see below in black there, black and white. You can get $500 off if you go here. I think, yeah. And if you want, you can click. You can't see at the bottom, but down here below me, there's a blue button that's being covered up where you can actually. I'll show you here. If you click this, the blue button you see here, you can actually get a call with somebody on my team to walk through. Does it make sense for you to do it? It's not for everybody. Okay. All right. Let me go back over here. All right. Okay, there's a bunch more questions. Oh my God, Tiger Glory, Cassandra, right? From Romania and then Florida, and I met you in person in 2021. You were in one of my first programs. Oh my God, it's so good to see you. And you named that after your daughter. I remember Tiger Glory. Yeah, my God, it's been years. I never forget my students. You wrote here, hey, glad to listen to you again. You're the best teacher in the world. Oh, thank you. And all generations, thank you. What 20 universities are you referring to? My 17-year-old daughter applies this year, and we need guidance. Yeah, it's so good to see you. Why don't you join us for the weekly webcast? Starts in a couple of minutes, and I'll spend ages giving you advice on how your daughter can get into great universities, etc. And my success rate on helping people get their kids or friends or associates of mine into HBS, Harvard Business School, 2/3 of which is BS, is about 100%. I've had people that have interned with me that have 3.0 GPA, gotten them in. Why don't you join? It's free. You've already signed up. But join the Zoom call. And if you want the Zoom address, if you don't have it, just email support@harounventures.com. And I'm looking forward to catching up with you as well. Okay. All right. Poirier wrote, imagine how boring DE Shaw would be if they only hired MBAs. Yeah, I interviewed there once, actually in the same office where Jeff Bezos worked. I decided not to go there. Kind of a weird office. Everything is either black and green. Yeah. All right. Yeah. Okay. And then Tiger Glory, email support@harounventures.com right now. And I'm going to send you the link immediately. And I'm looking forward to catching up. Okay. I do have to end this call right now. Love you guys. This is a really, really fun call. What I'm going to do is I'm going to end this call like I always do with a very short interview with Steve Jobs that is life-changing, that I licensed from the Silicon Valley Historical Association. Quick announcement, the next 10th MBA program starts on Monday. You can see the link below to learn more. Thank you. God bless you. And I'll see you soon.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.